Hey everybody, it is time for this week's episode of KLA Now. We are coming to you live from the Rockville office of Homebridge Financial Services, Kessler Lending Advisors. This is our live show, Facebook Live, where we actually bring information that is designed to give you consumers, real estate agents, inside information, whether it be on the mortgage industry or real estate industry, and designed really to how to protect yourself and get you some information that a lot of people just don't talk about. So it is a live show. If you have questions, we love interaction. Don't be afraid to just kind of chime in and ask us a question. Today's topic, awesome topic. We spend more time going through this topic with our clients than anything else. The reason being is this is the most important piece of a transaction. When you're buying a home, today we're going to talk about closing costs. We're going to talk about the numbers, and we're going to talk about the worksheets, whether that be a closing cost worksheet or the LE or the loan estimate. Those are the two documents that everything else in the entire transaction is based off of. So we're going to walk you through what it means, what the line items are, the details in there. We're going to talk about what are our negotiable numbers, where they come from, and just make sure that at the end of this, you should know how to compare closing cost worksheets bank to bank and what everything means so that you can comfortably move forward in a transaction and that there are no surprises. So first I want to kind of lay out and just talk about closing costs in general, where they come from, what they are, and what different banks do that you need to be aware of. So, closing costs. There are so many different things about closing costs that people talk about. You always hear that closing costs should be a percentage of the purchase price. And I got to tell you, one, that is an old myth that people would say, and that actually started with real estate agents because they would say that to clients to just kind of give them quick information. And I'm not going to say that that's completely wrong, but it is certainly an archaic way to approach this. I mean, if you literally want just a very generic number, sure, you can take 3.5% to 4%. But that's going to vary based upon purchase price, county that you're buying in, all different types of things. And so it's not really a good barometer to go off of if you're really trying to get accurate numbers. And I wouldn't want to be thousands of dollars off on an estimate when I'm going to buy a house. So the best thing to do is to actually get a detailed worksheet from your lender. Real estate agents, there's a lot of them out there that know this information, but again, they're not licensed mortgage originators. They are licensed real estate agents. And the same is that I wouldn't want to talk to a client about a contract for a real estate agent. A real estate agent shouldn't be talking about the numbers that are being given by the lender. So as you get through this, the first thing that I want you to know is that lenders actually only control two numbers in the entire closing cost worksheet. So all of these numbers, and these are 2-page long documents that you see with tons of numbers. Lenders are only responsible and control two of those numbers. So I'm going to talk to those about what they are right now. First, the obvious, the interest rate that goes on the closing cost worksheet. The second is the adjusted origination charge that will come up. And I'm going to be specific and show you these later. But when you're shopping loans, think about this. You can talk to 10 different banks. And the interest rate and the adjusted origination charges are really the only two numbers that numbers that the lender controls. Everything else is being quoted by the lender that somebody else is going to charge. Taxes, title insurance, settlement fees, all of these other things are actually determined sometimes by you. You choose the settlement company as the buyer, but the taxes are determined by the state and the county that you're buying in, and they're going to be exactly the same no matter what lender you choose when you get to the closing table. So trying to compare closing costs is what most clients do, and they have to understand that the numbers are only as good as the lender providing them. And if a lender doesn't do a good job and quotes incorrect information, guess what? You could be in for a big surprise. So let's go to our first couple slides and let's talk about some of these what we call tolerance cures, okay? And this means that if a lender doesn't quote accurate information, what happens? So first, there is a 0%
tolerance cure for some of these numbers that a lender is responsible to give. Meaning that if I quote as a lender the incorrect information, I'm responsible for paying for that difference. So if I were to quote you a fee of $1,000 and it turned out to be $1,500, you don't have to pay for that. I have to pay for the extra $500. So I am liable and held to that, which is a good thing. Some of those are the origination charge. That's a fee that the bank charges you. It is not common or customary, but it's the bank just charging you to originate that loan. Make sure that if you do see origination charges on your closing cost worksheet, that you're asking your lender why they're there, because they, again, are not common and customary. A credit charge. That's actually to just have the credit report pulled. So if a lender says that it's going to be $25, even if they have to pull multiple credit reports, they cannot charge you any more than what they disclosed initially on that LE. Adjusted origination charges, that goes into not only the origination charge that we mentioned at the top, but lenders actually will charge for a processing fee, an underwriting fee, and any other what they call junk fee, just to actually go ahead and process that loan for you. When you put all of those numbers together, and I'll show you in a worksheet, that comes out to be the adjusted origination charge. The next thing that is a 0% tolerance is the transfer taxes, okay? So we are responsible as the lender for making sure that we tell you exactly what those transfer taxes that the state and county are going to charge you when you purchase that home. So again, if we are wrong, if our numbers aren't accurate, we are responsible for covering the difference there. Let's jump to the next slide and talk about fees that can change more than 10%. So there's a 10% margin of error on these, okay? Anything above that 10%, again, we as the lender would be required to cover. Government recording charges, okay? That is outside of transfer tax because there are county sometimes recordation fees. It's not a transfer tax, it's a recording fee. And that can go city, county, state. Title services. You in the state of Maryland specifically, and this is going to change or differ state by state, but in the state of Maryland, the law is that the buyer selects the title company. So if I don't know who you are choosing as a title company, it's pretty difficult for me to accurately tell you what those fees are going to be. However, we are bound by a 10% tolerance because if you even choose someone that I have disclosed those numbers, and I'll tell you exactly what I mean by that, if I were to put in ABC title fee and you choose to go forward with ABC title fees, I have to quote those with a 10% accuracy. If you choose somebody other than ABC, I'm not held to those numbers. Owner's title insurance, again, these are kind of just like any insurance. They are regulated, but if you're choosing that title company and I don't know exactly what the purchase price is going to be, I don't know exactly how to quote those numbers to you. They vary. It's going to vary depending upon the company, and it's going to vary depending upon the purchase price and your loan amount. So it's very difficult to do that on the front end. An accurate worksheet, once you have a property, that's very different. Let's move on to the next slide. Charges that can increase. There are no tolerance cures on this, or meaning that if I quote a fee of what your initial escrow deposit is going to be. So if you tell me when we talk that you're going to put down $5,000, but actually only end up putting down $2,000, that's obviously not something that I'm held responsible for. Daily interest charges. I want you to take special note to this one because this is where a lot of people get tricked by the lender. It is a very common practice for a lender to only quote 1 day of daily interest, meaning that they're assuming that you're absolutely going to close on the last day of the month. And while there are a large number of properties or transactions that close on the last day of the month, both refinances and purchases, it doesn't happen all the time. A lender should be very conservative when they're going with this, and they should be quoting at least 15 days, but if not a full month, because if you are expecting to close on the last day of the month and it's $15 a day in interest, and then all of a sudden it moves 1 day and you go into the first day of the next month, oftentimes you're paying a full month of interest at that point. So it can jump up very quickly, and it's not to say that that is not a legitimate fee, it's just an unexpected surprise, and I don't think anybody would want that to find out, a couple days before closing. Homeowners insurance. guys, you select. No lender can tell you what homeowners insurance company to get your policy through. So it's very difficult, especially based upon the fact that we don't know what property you're really looking at oftentimes. How do we quote an accurate homeowners insurance policy when you're the one that goes out there and picks out all the bells and whistles? So that gives you a really good idea of what these fees are and why it's so important that a lender do a good job and quote you accurate fees. Lots of lenders, and I'm not saying, well, there are some really good lenders out there that do a really good job, but the idea of this is to teach you how to identify the difference between a good lender and somebody that's not doing you a service by just throwing numbers together for you quickly, and most importantly, understanding that those numbers are oftentimes used to sell you into something, knowing that they will be very different later on. So if I'm comparing two lenders, same exact property, same exact financing structure, and somebody has under-disclosed, a lot of consumers think that I'm going to go with this lender because their closing costs are less, when in fact, all they've done is under-disclosed properly. Because as I said, I go back to point one, the only fees that a lender controls, interest rate and adjusted origination charges. Every other number will end up being exactly the same. So keep that as a note when you're shopping lenders. Compare interest rate and compare adjusted origination charges. It'll make your life a whole lot easier. Let's go ahead and we're going to jump into the closing cost worksheet. We're having a couple technical difficulties here. That's what happens when you do a live show. But again, the deal is that when you're looking at closing cost worksheets, there is a tremendous amount of information. And walking through these things, we'll go through this line by line here, but when you're walking through this detailed amount of information, something that we do here that makes our clients feel very comfortable is we don't move forward until we've asked them 3 questions. We call them security questions. The first question that we always ask, and the first time we ask is actually after we've reviewed the closing cost worksheet. First question is, do you understand absolutely everything? You should be able to answer that question honestly. Yes, I fully understand all of these numbers, where they come from, how to negotiate them, whatever it may be. The second question that we're going to ask is, are you comfortable with these numbers? Understanding something and being comfortable with it are 2 very different things. You can understand every single number on this page and be comfortable with absolutely none of it. So again, be able to answer very truthfully and honestly with yourself that you're also comfortable with the numbers. The last question that we should be asking you is, do you want to move forward to the next part of the transaction based upon these numbers or based upon whatever process or step of the process that we're in? This puts you in control. This is the number one complaint that we hear from clients when they go through the mortgage process. They had no idea what was going on. The lender, the real estate agent, whoever it may be, was not giving good information, but they most importantly weren't putting the process back in control of the buyer. So try to remember that. That's a great tip before we jump into this. So this is the top of a worksheet. I'm going to show you a worksheet, and we're going to show you a loan estimate, because a worksheet is something that details information line item. The LE is a great way to have this information given to you, and it's required by the federal government, but this is a whole lot clearer. So this is the top of a worksheet, and it's always going to lay out high-level information about your loan, what those terms are, and as you can see here, it's a $548,000 loan. The interest rate is 3.625. It's an 80 loan to value, or LTV. That means how much are you financing out of the purchase price. So in this situation, they're putting 20% down. It's a conventional fixed loan for a term of 360 months or 30 years. And the APR is 3.687. We covered what the difference is between the interest rate and the APR, I believe 2 shows ago on KLA Now. So if you have any questions on that, make sure you look for that show. That'll give you a really good explanation on that. As you can see here, here's the estimated monthly payment breakdown. Always look for the breakdown of the payment. A lot of people will just give you a top line, but you really don't see what goes into that. They could be cutting on taxes, they could be incorrectly quoting the taxes, or the homeowner's insurance, or what have you. So make sure that you're getting a complete breakdown. Also, note as it comes up, never accept this information if it's just in the body of an email. Okay? It's actually federally illegal to present an interest rate or what have you in a form that is not approved or accepted by a lending institution. So there's a lot of loan officers that will just type very quickly, here's your interest rate, here are the terms, and here's the payment. You should be looking for somebody that's doing a little bit more for you than that. On the right side, if this is an interest only or an ARM, you're going to find that additional information here, but in this case, because it is a 30-year fixed, we don't have that. So next slide, please. This is the top of the worksheet. So when you're looking at this, we've got up here, those are the loan origination or adjusted origination charges that we had mentioned before. Here at Homebridge, we have a $950 total adjusted origination charge, which is comprised of a $450 processing fee and a $500 underwriting fee. So our adjusted origination charges would be $950. However, if we, which we commonly do, give $150 credit, that would actually lower those adjusted origination charges down to $800. That's actually what you would compare bank to bank if somebody else were charging you to process that loan. So you can take these top 4 line items, add them all up. Those would be your adjusted origination charges. So again, back to square one, comparing interest rate and comparing adjusted origination charges bank to bank. Beyond that, down here we have an appraisal fee, a credit report fee, a flood cert fee, and a tax service fee. Lots of people don't know what these are. Appraisal fee, obviously very common. You have to get an appraisal report. So that's really a very, very small difference. The market is anywhere between $450 to $550 on an appraisal. Credit report, $57.60. That is actually taking into consideration that we might have 2 to 3 credit report pulls throughout the process. We generally only pull 1, but oftentimes people will need a credit update, and those cost fees. So we go ahead and over disclose. Flood cert, $10. Every single property that gets conventional financing is required to have a flood certification on it. That flood certification is just simply a company that provides a certification deeming whether or not your property is in a flood zone. If it is in a flood zone, it needs flood insurance. That's separate outside of this. We don't talk about that. This property did not require it. A tax service fee. In Montgomery County, and in most counties, there's actually a charge in order to set up the escrow payments from the lender to the county for tax payments. That's a one-time $70 charge to do so. That charge is not applicable on government loans, so that would be removed right there. We're going to scroll down to the next screen because on the right side here, these are prepaids and reserves. These are not included in hard or third-party fees, so we'll come back to this screen. So if we can jump to the next slide, down here at the bottom, we have title and closing fees. On the right side, you see that actual settlement fee. That is what, and if you go back to last week's show with Jill Michaels, so her company actually performs settlements. And what they do is they go and they get a title binder, they pull an abstract to make sure that the liens on the property are cleared, and then they actually perform the settlement. They sit down at the table, they have all the documents signed. That's what that $975 represents. That varies. We've seen companies charge as little as $500. Some companies charge as much as $1,500. You need to know what you're getting for that fee. $975, I'd say that's probably a good middle-of-the-road fee. But again, that doesn't come from us. That's our best guess. Once we get the actual information of the title company that you choose, we obviously update that information and plug that in. On the left side, we have owners and lenders title insurance. These two numbers are again coming from the settlement company, and they basically go in and based upon the parameters of the loan, they pull an insurance policy. This is something where most people don't understand it, and they don't get it explained. Owner's title insurance is optional. You do not have to get it. However, it is good to get because it simply covers you, the owner, and it covers you in case there is anything wrong in regards to that title search or a clear conveyance of the title to you when you buy the home. So if there was a mistake or an error and somebody came back and said or made claim on your house, instead of you having to go and hire an attorney and fight that out, which can become very expensive, this gets you an insurance policy through the title insurer that they have an army of attorneys that would go and fight that out at no cost. It's a one-time cost. Again, it's optional because it covers you, the buyer. That's why lender's title insurance only covers the lender. Lender's insurance is not optional. And so that is a common customary fee. If we drop down one more slide, on the right side, you see a survey fee up at the top. It is customary that you will be offered a survey by the title company. But again, lenders, you need to find out if your lender is the one that requires that. Some do, some don't. Homebridge, we do not require a survey fee, but we still disclose it, or a survey on the property, but we still disclose the fee because you as the buyer may choose to get that or elect to do so. That'll be offered to you by the settlement company as you go through. Over here on the left-hand side, here are the recording and transfer fees. Now this comes from either the state or the county that you're buying the property in, and it really is just, it's a calculator that you put the purchase price in, what the loan amount is, and it calculates everything out for you. It is customary for the buyer and seller to split these fees 50-50. However, guys, that depends on what your real estate agent and you determine in your contract. Sometimes the buyer could cover 100%, as very common when you're buying a new build from a builder, or in another situation where if you're buying a property that's owned by a government agency, meaning if you're buying a Fannie or a Freddie property, they are tax exempt. And a lot of lenders miss that, and so they disclose it 50-50, and then later on they find that you have to pay for the seller's half as well. That's a huge jump, especially when you're talking about, in this case, $7,500 roughly. So again, you want to make sure that the information is correct based upon the transaction, okay? So, but again, these are all calculated. There are tons of calculators. A company that is doing the settlement always provides a pre-HUD to make sure that these are accurate. But you can go to lots of websites. If you have questions about what those websites are, hit us up here. We can let you know what they are. We'd be more than happy to. You can always email us at KesslerLendingAdvisors@homebridge.com, or you can go to Facebook and we'll get right back to you there. So let's go back up one slide, or excuse me, 2 slides. So we've covered all the third-party fees, okay? Now these are actual hard costs of doing a loan and buying a home. But you also have prepaids and reserves. Now these are not hard costs, but it is part of actual closing, okay? Part of settlement. The first section is those prepaids. What that means is, as I mentioned before, when we were talking about daily interest, is it 1 day, 15, or 30? As you can see here, we've disclosed 30 days of interest. Now think about this. It's at a $54.42 per day per diem, okay? And if we only disclosed 1 day, that number wouldn't be $1632.74, it'd be $54.42. Now if that got pushed, that's a huge difference. That's almost $1,600 difference. And that's a legitimate number, but I want you to know that that's not a fee. That actually goes to your first month's mortgage payment, okay? So if we were to close today, which today is September 9th, I believe, you would count from today through the end of September, count all those days up at $54.42 per day, and that essentially is your October 1st mortgage payment. That's why you wouldn't actually write a check until November 1, because you're making your first month's mortgage payment at closing. That's why, again, if you're being conservative, you're going to account for all 30 days and just know it's only going to get better from there. That's the right way to go about it. Homeowners insurance. Now guys, there's no way that we can predict what those premiums are going to be. That's going to be up to you to get that policy. Quick tip about homeowners insurance. When you're buying a house, it's a large property, very valuable. You should be not planning on making many claims against this. The reason why I tell you this is take a higher deductible on your homeowners insurance policy because you'll be making less claims on there. Anything that is a $2,500 deductible or slightly less is going to keep your annual premium down, and the likelihood of you actually making a claim on that, you'll deter it. It'll be much better in the long run to do it that way. Now drop down to reserves. Most loans, not all, you have the ability to waive this, and it's called waiving the escrows, where you basically pay the taxes and insurance yourself annually. But most loans actually escrow for this. And what that means is every month you put 1/12 of the annual homeowner's insurance premium and 1/12 of the annual tax bill into an escrow account. The lender holds that escrow account, and then annually the lender goes into that account and pays it out either once a year for the homeowner's insurance or 2 times a year or whenever the schedule is for taxes. So every single time you make a payment, they're taking some of that payment and putting it over here into this escrow account. But you've got to set that escrow account up and fund it at closing. Now the insurance, that runs from the day that you close, and it goes every year. So as you start, you're going to put your first month's mortgage payment in and then the 2-month cushion that the federal government requires. That's why you have 3 months it's going to go into that escrow account. But taxes are a little bit more tricky because the tax bill doesn't run or coincide with your settlement date. So you could be closing today, but your tax bill not be due until sometime in the beginning part of next year. So what they need to do is calculate what those months are. Now I've put 9 months in here as an example. However, there is a trick. Lenders are not required to tell you about months that you would have to pay back to the seller for prepaid taxes. Here in Montgomery County, taxes are always prepaid. So we pay them December 31st for the first part of the year. And then the bill comes out in the beginning for the second half, comes out in July, but it's not due until the end of September for the second half of the year. So if that bill has been paid by the seller and you are going to be moving in before that end of the month or the end of the half of the year, you're going to have to pay that seller back for those months. The lenders are not required to tell you about that. However, it doesn't mean that that's not a charge that will show up. It will just show up on page 1, okay? So when you're looking at these things, you need to make sure that that's being properly disclosed as well. And so always ask your lender, am I going to be responsible for paying any months back to the seller for prepaid taxes? Great question to ask. You can ask your realtor as well, but this is where a lot of people get surprised, especially look at this. It's $668 per month. If they've only disclosed 6 months and then you have to give 3 months back to the seller, that's a surprise $1,900 that you just weren't aware of, that you just found out about. So let's drop down now 2 slides. Here's how these things get put together. It's quick, it's easy, and it's simple math, but this is how clear it should be for you. You look at the left side of the page. You've got your purchase price of $685. They're putting in the hard third-party fees of $15,000, okay? $15,00985. Those are all the fees that we talked about in the first part that are exclusive of prepaids and reserves. The next number is our total estimated reserves and prepaids, totaling $9,150. Down at the bottom, it adds all of this up. So the total costs are $709,159. Go to the right side. Now you're going to get credits. The first thing that we're going to do is credit you a loan amount of $548,000. That's what we're borrowing. We got a lender credit of $150, which is what we covered earlier, totaling $548,150. Now, how do you figure out what you have to bring to the table? Down payment plus closing costs. You're taking your costs and you're subtracting your credits, and the difference is $161,009.90. It's very simple math. So you can see to make sure that everything is included. Now from these worksheets, everything conveys into your LE. The LEs are laid out very clearly. They're very simple to read, but a lot of this information that we covered today is not laid out. My point, ask the lender for a closing cost, whether they give you an LE or not. Ask them for a detailed breakdown of the numbers that correlate into the LE. And then more importantly, here's the number one thing that I see a lot of lenders make a mistake on, and a lot of clients complain about it. A lender will do a quick worksheet, they'll shoot an email out, and they'll say, here's what your transaction looks like, let me know if you have any questions. Obviously, the information that we went over today, there can be a lot of questions. There's a lot of things that we can still get into more detail on, but if we don't walk through these numbers with you to make sure that you can answer those 3 questions, that's a lender's job. A lender's job is to make sure that you are protected in this transaction, that you know what you're getting into, because responsible lending is the most important thing that a lender can do. So guys, that is what we've got for you today. Hopefully that gives you some really good insight into what the closing costs are, how to go through them, what you need to be looking for, how to shop different lenders, but most importantly, make sure that you are getting protected. Protect yourself, have the lender protect you, make sure that the real estate agent's on board too. And guys, that's what we preach here. So if anybody, again, if you like this information, this is really what we're all about here. If you would like us to review one of your closing cost worksheets to make sure that your lender currently is giving you a great deal, we'd be more than happy to answer any questions. In fact, we get that all the time. We're more than happy to take the time to do so. So give us a call. You can reach us here in the office, 240-483. No, that's actually, I'm going to give you a different number, 240-403-7233. And then you can always ask for me personally, Cody Kessler. You can also email us at KesslerLendingAdvisors.com. You can see us on Facebook. You can find us on Instagram. So like us, share us. Please, this information is good stuff, and we appreciate you watching. So that's all we have for you today. Look out for next week's show. Should be a great topic. We'll get it out to you. But thanks for watching KLA Now. See you next week.